Hey, welcome back in. So there was some weeping and gnashing of teeth over the markets the last couple of sessions. The Dow dipping down at losing close to 1,000 or more points early in the session. It rebounded later, but do you need to get into your 401k and change your investment strategy? That's the question this morning. Joining us this morning to tell you what you should do, financial expert Stewart Welch of the Welch Group. Good to see you this morning.
Mike, good morning.
All right, so explain some of the factors that is causing some of the, I would call it mild sell-off, really. It's not a major sell-off here, I don't think, but and some of the preliminary panic of what happened with the Dow.
Well, it really started, if you go way back, it started when China devalued the yuan, their currency, and it showed that the China economy was weaker than it was expected. So that really got the ball rolling. The other things that are factors are the low crude prices, low oil prices, and then there's uncertainty around interest rates with the Fed. So all of that's kind of coming together, and you've got a tug of war between the bears and the bulls.
Now put this decline in perspective. We've had a couple of sessions now we've lost more than 500 points. Yeah,
we have. So the market's down, it crossed into correction territory, down minus 10%. Normally, Mike, you'll have one of those every 2 to 3 years.
Right.
We haven't had it for 4 years, so we're way overdue. I looked at the futures right before we came in here. It looks like the bulls are out and running today. So the market, the pre-market, it's up about 600 points on the Dow. So I don't know how it'll play out today, but there's this tug of war. It's really instructive to understand that in the history of the stock market has recovered from these 100% of the time.
Right.
And so if you're going to bet, let's bet on the bulls.
And we know from history these corrections don't always mean bear markets for an extended period of time. However, it's anticipated that the Federal Reserve was going to raise interest rates this fall. If they still go through with that, how could that impact things?
I don't think it's going to make much difference. The reason that they're raising interest rate is because they believe that the U.S. economy is strong enough to handle that. And by all signs, the economy continues to improve. It's still pretty anemic. It's not improving at a very rapid rate, but it is improving. So when you actually stand back and look at what's going on, our economy looks pretty darn good. Okay. Now, what's happening in China, the second largest economy in the world, so what's happening over there does have some impact here, but we look really good.
All right, so anybody just watching on television what's going on, and they're not really following the market that much, but they see the big news headlines, the Dow plunges, but it's the S&P 500 that's really important. Talk about that. Why is that?
Well, the S&P 500 is probably the most followed index. It's 500 of the largest companies in the U.S., and it is kind of the benchmark for what's happening in the U.S. stock market. The Dow's 30 stocks, so it's a much smaller piece of that. So actually, both of those are watched. S&P watched the most often. They will tend to move together.
But if you really want to know what's going on and not panic, the S&P 500 is where you need to look first.
Yeah, I think you could look at both of those. People
Okay.
tend to look at both of those and see what's going on.
All right, so now someone who doesn't really follow the markets, but they do have a 401k, they know they have mutual funds or whatnot, they got money invested, what should they do right now?
Nothing. Keep investing. They're dollar cost averaging into the market. So every paycheck,
Right.
They're putting a little money in the market. They should look at this and go, wow, I'm getting to buy stocks while they are cheaper than they've been in 4 years. So it's a really great opportunity for them. If I was a 401k investor, I'd think about upping my investment during this period of time.
And what if you're close to retirement, though?
If you're close to retirement, then hopefully from an allocation perspective, you have a little more in things like bonds. So if you're close there, you probably want 30%, 40% in bonds if you're within, say, 5 years of retiring.
All right, real quickly, oil trading, as you mentioned, is down to $39 a barrel, which it hasn't been that low since 2009. When are we going to see the gas prices really drop at the pumps? They dropped already, we know that.
Yeah.
But can they get back down to $1.25, which is what it was when I graduated high school?
Yeah, I don't think you'll see $1.25. I'm actually surprised, now we've seen under $2 at some pumps. And that's a huge benefit. People don't think about that. That's a huge benefit. That's a lot of money in consumers' pockets. They're going to turn around and spend that, put that back into the economy. So I think we're in good shape.
Not a benefit, though, if you work in oil.
Yeah, but I think they'll recover too.
Okay.
They'll consolidate and they'll end up fine.
Stewart, thank you.
Thanks, Mike.